Many thanks to Ivana for sharing the case study. Dear audience, please be reminded that you can also ask questions to Ivana in the direct message on platform. We move on to our next speaker, Domagoj Mandaric. Domagoj is the Chief Commercial Officer at Vestigo, card and account payment solution, and he will speak about convergence of cards and account-to-account payments. Ask your questions in live chat. Domagoj will answer them during the panel that will follow right after the keynote. You can also find Vestigo among exhibitors, so do make sure to stop by and visit their booth. Welcome to the stage, Domagoj.
Good morning, everybody. My name is Domagoj Mandaric. I work for Vestigo, and today I will be talking about convergence of cards and account-to-account payments, basically about these two worlds coming together. I'll talk, and maybe before I start, just to mention, please, let's make this interactive. Please use the chat function of the platform to ask questions, and we'll respond to these later during panel discussion. And also feel free to reach out via LinkedIn or email. I will show my address at the end. I would love to continue these discussions also bilaterally with those interested. Today, I'll talk about first about the evolution of convergence of payments, about what happened in the history of payments, which leads us today to talk about cards and account-to-account payments coming together and possibly merging. Then we'll talk about ways for banks to implement these type of solutions to achieve benefits of payments convergence, and also about the current market, about players offering cards and account payment solutions. So let's start. First, the history, and it's a brief history, no worries. Historically, as we all know, card payments and account-to-account payments were completely different worlds. They were separate use cases, separate infrastructures, separate everything. And it was very clear to everybody. Nobody was confused. If you wanted to buy something in a shop and pay immediately, you took your card. If you were traveling, also you took your card. You could pay immediately. If you wanted to transfer money to somebody, you used credit transfer, and it took a day or two. Also very easy. Banks had separate systems for these completely separate functions and separate rails, separate everything, and this was also very logical. In today's world, and probably starting with the growth of internet, PayPal, and all these things, we are now entering, first of all, the payment infrastructure, which originally took a day or two to transfer money, is now speeding up. Cycles are getting shorter and shorter, and in extreme case, we have instant payments with immediate transfer of funds. Then there is also open banking, PSD2 initiatives. So like I said, the instant payments, this is addressing one difference between cards and account-to-account payments, which is the timing. So with instant payments, account payment world is becoming immediate as well. Then there is the question of use cases, because with cards, you go to a shop, you pay, you walk out. Now with open banking, with PSD2, we are entering, and with general technology advancements, there are cards similar or pretty much same use cases becoming possible also on account payment rails. And I would see European Payment Initiative as very important as a booster of this industry trend. So in Europe, again, in this perspective, I would see it as a big booster for convergence of payments, because in essence, it is using instant payment rails, this infrastructure, to achieve card type use cases. And then, in the eyes of the customers, convergence is already there. They have a mobile wallet on their phone, and probably they registered both their card and account as funding mechanisms, and then they're using this mobile wallet. In their mind, they're paying with the mobile wallet. They don't really care if in the background card or account rails are being used. On the other hand, for the bank, this is very important. Because we described all these changes, still nothing really much happened with banks' backend systems. They are still completely separate systems for account-to-account payments and for card payments. So definitely it can be said that backend systems are lagging behind advancements in front-end, in customer experience, in the industry, in infrastructure, in everything. Everything is moving forward very fastly, but these legacy backend systems seem to be stubbornly stuck in time. And therefore, as a target model, banks' backend system need to catch up. Banks' backend system need to catch up with the world, with customer needs, with infrastructure advancements, with industry initiatives, with everything. Target model we see is a single system in a bank across cards and account-to-account payments. And there are many benefits to this model. One is consistent customer experience. So now you can really have a customer view. You as a bank can understand your customer and treat this customer in a consistent manner. Why? At the moment, customers get offered loyalty, financing, or a bunch of other features if they use cards, and they do not if they use account rails. There is no good reason for that. And at the moment, this is not a business decision, but most of times this is simply a technical necessity because card and account systems in a bank are completely separate. So putting everything on one system enables consistent customer experience, enables deeper customer insights with all the data being on a single system, and enables strong operational efficiencies. Because now, instead of having duality of systems for pretty much the same thing, like core system for account-to-account payments, core system for cards, and then all the associated systems, like, I don't know, fraud, AML, everything, you can put everything on one system. So you cut out half of the systems, I'm simplifying. And then remaining systems, if you take a fraud system, for example, suddenly now you have one fraud system instead of two in most cases. This system has more scale, better unit cost, and also can make better decisions because it gets more data about the customer, can develop deeper insights into patterns of customer behavior. So advantages all across the board. So this target model is obviously great both for customers and for banks. Question is how to achieve it. So two basic models, we call them end of spectrum. Obviously, there is somehow stuff in between, but one, implement from scratch, or as people call it sometimes, rip and replace. Simply implement a new single system across cards and account-to-account payments. Second model, putting convergence layer on top of existing legacy systems. First system, it's a clean start. Once you put it in there, there's maximum efficiency because there's a single system to maintain, to work on, to innovate on, gets all the innovation budget. So it is a very clean thing with a maximum efficiency. Now, on the negative side, these type of projects tend to last long. Investment is not neglectable, and also it's a high risk thing of banks. I think in the meantime learned really how to handle big projects, but always a big project equals bigger risk than a smaller project. Convergence layer approach. It's easier in a way to do gradually. So you can do step by step. You can get some quick wins, and you can also split it into portions. So makes it easier to have a progressive transformation, progressive modernization towards convergent system, and the overall investment is lower, also simply because you're not doing the full thing. You're somehow in an intelligent way separating out functions which are important for convergence and which go into convergence layers, and then leaving some of the functionality like booking or something in the legacy systems. So all of this is great. On the negative side, at the end, once you have implemented this, you're still running multiple systems, although legacy systems are hollowed out. So there is a higher cost of running this in total in principle. And maybe just a comment, this convergence, I would say the alternative number one, convergent system, in a way it's easy. It's very straightforward, it's easy to understand because at the end there is a single system. Alternative two with convergence layer, we would like to comment a bit about what comes into this convergence layer, because here you see 3 boxes: cards, accounts, convergence layer. So question is, what goes into convergence layer? So this is my next slide. In essence, everything which is important for customer centricity, which needs to be seen on a customer level, everything which is real time, everything which is important for integration, in particular real-time integration with third-party systems, should sit in this convergence layer. Here, one important point is authorization. So this system should hold customer level balance, and to make it a proper balance in a way, it needs to include payment prioritization logic. So this is then key for 24/7 availability, incoming and outgoing side. Second thing important is pricing. Pricing on a customer level, definitely very important in all the markets which sometimes do bundles / packages. You get 3 free ATM withdrawals plus 10 free transactions plus this plus that in different packages. So to handle all of this, you need to properly and powerfully, you need to sit on a customer level. Limit management, big topic. With product level limits, banks frequently need to somehow separate this and on aggregate, so it can lead to customer dissatisfaction. And also on aggregate level, you can give a higher limit to the customer than actually necessary. So both for the customer and for the bank, it is good if limit management is centralized. And then we talked, frequently legacy systems with their history are not really great in integrating with third-party systems. In particular, if we talk about API type real-time integrations. So we would see this portion on convergence layer as well. And then multi-currency accounts, again, frequently something which touches both card and account and somehow works best in combination of the two, and also needs to be close to authorization to be done properly. And then on the theme of everything which is real-time, instant, and like instant customer / product onboarding, then card controls, or maybe better to say card and account controls, because in this model with convergence of payments done properly, not necessarily are these card controls, they're really customer controls, and sort of can also work not only on card but also on account level and on customer level, where it makes sense from business perspective. But most importantly, there is no technical reason not to do this. There is no, let's say, technical limitation as long as this is desired business-wise. So this convergence layer, it's really a rich layer with a lot of functionality sitting on it, so which then leaves some functions which have been, developed over time and very stable and strong on legacy systems. But everything which is leading to modernization and convergence goes into convergence layer. And then next question is, speaking about these two things, about a single system solution or a convergence layer, can you go out and buy it? And this is, let's say, comments on the market, obviously subjective, but and simplified, but hopefully helpful. So we separate the market by 2 axes, by 2 dimensions. One is technology, the other one is functionality. For technology, we take 3 levels: legacy, service-oriented architecture, cloud. For cards, we look into basic functionality, sophisticated functionality, and then we also take account-to-account payments as another functionality bucket. Basic cards, we say, are typically done by neobanks. Process-wise, they are very modern, but like core functionality-wise, this is still pretty basic compared to a universal bank. Like typically, this is like a single debit card, or maybe there are two products, but it's nothing compared to a product portfolio richness of a typical universal bank in Europe. And then technology, typically as a rule of thumb, I would say reflects the year of founding of the vendor, but there are definitely vendors which did work and managed to upgrade their technology to a more modern level. So when we take these two axes and somehow these attributes, what comes out? We identify fintech processors, very modern companies dealing mostly with challenger banks or with some corporates for whom they also do program management type stuff. Super modern technology, quite basic functionality. Then if we look into sophisticated functionality for cards, we can see two groups meeting this demand. One are third-party processors, typically large global players with hundreds of millions of cards processed and very rich functionality, and with technology reflecting long company histories. And then a bit later comers to the market, typically 2000s, CMS vendors, mostly selling software, who in the meantime have also achieved a strong level of functionality in this space. None of these groups typically enters into account-to-account payment space. Account-to-account payment space is a separate market still, and can, again, same logic has traditional players, cloud players. I would say the biggest difference in a way is that historically card space has had many more third-party service processors, while account-to-account space has been more software driven. In a way, I described it up to now. Payment convergence solutions is offered by nobody. At least, this is my best understanding of the market. Nobody is really cutting across cards and payments to offer a single solution which would enable payments convergence in a way I described it today. They are large corporations which, as part of M&A, have systems for both cards and accounts, but these tend to be separate systems just sitting within the same company. And now at the end of this analysis, obviously I would like to mention company I work for, Vestigo, because obviously Vestigo's strategy is to cover this white spot of payment convergence solutions, and I think we are doing really well there. Let me give you an overview. So we support both models for payments convergence, which we described today. So we offer both card management system and payments hub on the same solution, on the same technology stack for alternative number one. And for alternative number two, we have a convergence layer, which we call holistic pay, and which is consistent with the requirements on a convergence layer I described before. So you can see here API integration capability, product factory pricing, all transaction data, customer level limits, all these good things are sitting there. As a company, we have clients in 7 European markets and continue to grow strongly, and we work for banks and processors and other industry players. Obviously, apart from full convergence solutions, we are also selling modules. So, we would be happy to talk to you about payments convergence, whatever model, but also about card management system or payments hub or anything else you would like to discuss in the cards and payment space. So hope this was interesting for you. I would love to continue these discussions. So please please reach out. So again, either through the conference platform or LinkedIn or email. You can see my email here. I would really look forward to continue talking about this, and wishing you all a great COVID-free summer, and hope to meet you soon. Bye-bye.
Thanks, Domagoj. Now let me introduce our next session. Panel discussion was a topic, fostering payments innovation in our region. The panel is moderated by Lukas Kovanda, a chief economist from Trinity Bank. Welcome to the stage, Lukas, and I believe you will introduce the panel to us.